just say if you can hear me on it or not. I guess I probably need to send you a new link. It's on my YouTube. If you just put it on the TV. Okay. All right. Well, guess the last. All right. I gotta put it up on Facebook. Sweet. So let's just shut the door and shop. Can you just yell if the audio goes out? I'm not gonna see a text. Oh. Oh shit. Can't show that stuff. Alright. So we are going to go live and talk about how to find something on market, which is kind of a difficult thing right now, not as impossible as a few years ago, because there are sellers that need to get out and there are not dumb buyers willing to pay too much anymore as often. So, but interest rates are hurting. I think right now I want to start the conversation and assume that the average interest rate for a non-occupied home, aka investor, is 8%. So we're using the mortgage calculator. Got it right on my phone, so when I look over here, that's what I'm working at. A lot of times I get a lot of calls from people on Bigger Pockets and people that come through my YouTube channel and just local people that know me and are asking for, what's the easiest thing to invest in. I am not somebody that's out there on the retail market, so I obviously am not acting as a realtor in my daily life, so I don't see what things are like selling for. I just see what things are for sale for. However, I know rental rates probably better than most, so this live is more about showing you the basics of penciling a deal and me just looking on market as if I was to invest today. A lot of it is expectations of how much money someone wants to leave in a deal. Is it 10, 20 grand? Is it zero? Do you want to burr out of it and get have literally no money in the deal and get money back on close, which we all wish we could have on unlimited repeat? Or are you willing to spend, 100,000 plus to make a single family deal work? And I don't think there's a wrong answer. There's just incorrect expectations if you're not willing to put in the work for what you want. If you want to find a burr, you're probably going to have to go spend your own marketing money, start mailers, start cold calling, start learning how to acquire deals yourself. And if you are okay with investing a lot of money, then, we both know people that pay probably quote unquote too much for real estate and will go on the MLS, find a multifamily professional realtor and start putting in offers. And I don't think anyone has a wrong option for themselves unless they just can't evaluate their own I wouldn't say own value, but really what do you have in your pocket, in your back pocket? Do you have time? Do you have capital? And do you have talent? Because if you have a lot of time, you can go off market and find deals, but you're still going to need to have the talent of negotiating and honestly getting people interested in hearing your offer out because of how many people are cold calling sellers off market these days. And so that takes talent and time, but you don't need a ton of money. if you want to muscle through. But if you have a ton of capital, you don't have to have as much talent and time as much as you do just the capital to go buy it. Um, you know, we've probably seen celebrities on the news, or celebrities, professionals, people that are outside of real estate that have so much money that they just tell their attorney to go buy 100 units and let that sit, and they wait. They don't really care what it costs. They just go and buy it, and as long as it's reasonable and it's a deal that their attorneys and their team sees as a good investment and asset to hold on to, they'll just do it. And that's why kind of the bigger, nicer properties have really smaller return on investment because of how quiet they are. But to get into this, I just wanted to bring that up because I think it's important that we have accurate expectations. And I'm going to probably show you something that you would be surprised by if you know me, because I actually, if you don't know me, have done a lot of off-market real estate. That's how I got into this game. Now I'm a property manager and manage just over 220 units in Knoxville. And I got into this on purpose so that way I could create a cash machine to then go and buy my own rental properties. And my goal is to have 10 rental properties before I'm 35. I will be 32 next month. So I have 3 years and 1 month to go find those 10 and get those clocks ticking down on those 30-year mortgages. And that to me is going to be a big success, to just acquire those 10. So he said a little quiet. Let me get my audio up a little bit more. What about now? Is that good? I know guys said he's watching. I turned myself up a little bit. Is that good? Okay. My wife's in the living room watching it on the TV. So, where was I? I'm talking about my goals: 10 by 35. So I got 3 years to find 10. So I got to get 3 on average. I bet I don't even get 2 in the next year because I'm still creating my cash machine, because I want to buy real estate where I want to buy it and where I believe in it. And the asset type that I want is probably A or B class. I do manage a lot of C class, and I've learned they can be really profitable, but they also can cause a lot of noise, and it's just what you want personally. This live is going to be on probably just single family deals, but I want to set the stage for just like expectations before we get into this. And so a lot of us want 50, 100 units. I want 50 certainly by the age of 60, but I just want my first 10 to get going, because getting those mortgages paid off is number one. And so the first 10 deals I buy are going to me, be the most important. They're going to help me build the 40 after that in equity. So as these properties appreciate, I'm going to be able to basically maneuver the debt around to buy more sooner. I will also take these 10 and make sure, when I'm playing the game, that they cash flow really well. So that way I can save money for the 11th property sooner. And then I want to make sure they rent and they're desirable to my end customer, which is the tenant. So that way I have low vacancies. So that way I'm never going to have to take money out of my own pocket to pay the mortgage. And that way, once again, I'll be able to buy that 11th property sooner. And I want them in areas where rent will continually go up, so that way the rent keeps creating more cash flow as that mortgage stays the same every single month. So with that in mind, I think your first 10 properties have to be done smart, or else your 50 or 100 unit / single family house goal will take longer. And on the positive side, you actually don't need that much real estate paid off for you to be like crushing it. So a lot of us think we need the 50, we need the 100, but we really probably only need 10 to 15 single families paid off as well, but 10 to 15 bring you a lot of opportunity and security and a great retirement. I can go into the numbers on that, but maybe another time, so that way we can kind of get more to the point of this. On market real estate is, I believe there's a huge opportunity in it right now. Probably more of an opportunity there than off, even if I spent equal time. So I think a lot of us think on market real estate to save time, and I do think that is the case, but there you can waste a lot of time in both off and on. So I really think that it's an equal opportunity in both, if not a little bit better in the on market, just because sellers are not as frequent, or I'm sorry, buyers are not as frequent trying to make offers. Everyone's got their tail between their legs, and sellers don't want to come off all the time, but eventually they'll have to, and inventory is only increasing, and it's just going to be really interesting as we see these next couple months and years go by, especially when we get into like a winter season, just like a slow season. So I will probably start an acquisitions team again and try to find some off-market deals for myself and build that machine back up. I don't know if it's in the next 6 months or the next 18 months. I want real estate to be passive for me, so if that marketing channel and team is seen to be hard to build, which I've built these before, it can be very difficult. I won't probably spend my entire next 15-20 years doing it. And I don't know if a lot of people watching this have the time to be an acquisitions team themselves. So the on-market real estate is somewhere where you can get down and dirty and have leads right at your fingertips, which is literally Zillow, Redfin, Realtor.com, MLS if you have access. And so I just want to say that I don't think a lot of people know what they're doing on market trying to find a deal, and it's because they're not putting the reps in that they probably should be, and they're not as attentive and fast as the next guy. If you're not able to put in, multiple offers a week, I think that people that want to find a deal in 4 weeks need to be able to put in, 5 offers a day, 5 days a week. So in a month, you're going to put in 100 offers, and they all need to be numbers that make sense for you. So there's more and more inventory on the market, which means there's not a lack of deals to put offers on like before. So I'm going to start searching in Knoxville, and I'm just going to look for some deals. I bring up the fact that people aren't putting in enough work because I think, expecting cash flowing deals to appear at your doorstep at the time of day that you want them to appear is just an expectation that is just false and wrong. And we should honestly either be willing to pay the price for the real estate and have it be passive, or put the time in and go find those deals. And so there's one or the other. And it doesn't mean that you have to be off market to go find those deals. You just have to put in the time. So what I'm about to do is not go put in the time and show you how to put in 100 offers, but I am going to show you, if you were the average W-2 employee that has money saved up, is interested in investing in real estate, what the average deal looks like right now. And so this is where I'm going to finally say that I'm guessing right now because I'm literally doing this live, but I think it's going to take $100,000, if not a little bit more, to make an average single family cash flow and be a safe investment, so that way you don't have to just keep having money come out of your pocket to afford repairs, vacancies for mortgages that are always due every month, whether a tenant is living in it or not, and really just making the deal work overall. Once again, it's, over $100,000, which may kick some people off this stream because they're like, well, I'm not interested in learning about how to buy a piece of real estate with $100,000. I don't have $100,000. But that's also why I've been building my business, so that way I will have that money and be able to disperse that capital into the market while other people wait for the perfect deal, and I'll keep buying and buying and buying, and it'll be more passive because I'll have better pieces of real estate that are quieter, and over time I will see the fruits of those investments compared to day one, and it will take quite a bit of money to do. And so let's just blindly go into Knoxville. I'm looking at it right now, and 3-bedroom, 2 baths right now, a quality house will rent for $2,000. Even in less desirable neighborhoods, if the actual asset is crystal clean, it can get $2,000. Even pushing your luck with 1,000 square foot, 3-bed, 2-bath, you can still get that $2,000. It's tough, but it's definitely doable if you've renovated the house and made it crystal clean and a product that's hard to find elsewhere. So I'm going to look at 3-bedroom. Well, I'll just start out with like anything that's single family. I don't think townhomes and condos are like things that people should really invest in because they're not as liquid. I mean, you can't sell them as fast as single family historically, and really like things that have shared walls typically don't come with private backyards. Sometimes they do, but you really are just getting a fancy apartment with a little bit more of a front yard, and then you're going to be competing with those luxury apartment complexes, and they're going to have gyms, pools, hot tubs, pet parks, like all of these amenities that you may not have. And there's more apartment complexes being built like every day, and you're really, the attached garage is a little bit of a value, but it just comes down to the fact that combined with not bringing a lot of value past an apartment for your end customer, and your HOA fee is like probably always increasing, there's not a lot of reason to look at them in the first place. So single family houses, in my opinion, are really where you want to go unless you're looking into the multifamily. Now, I can see an argument with the townhouses and condos because maybe the HOA covers the roof, they do the lawn, blah, blah, blah. But at the end of the day, if I have an HOA fee that I have no rights of, dictating what that price is going to be in the future, it's only going to take away from cash flow, and I'd rather be in charge of my own roof at the end of the day for repairs in the first place. So we're going to look at single family houses. I think I'm on waterfront only because I was looking at dream houses in Michigan, and all the red dots are here. So this is crazy. This is like everything that's on market, of course, that's single family in Knoxville. So it's, we're in a city, but at the end of the day, like 3 years ago, this was gotta be like half the red dots. It's incredible. So we can see we can make as many offers as we wish because there are, 1,240. So me earlier in the live saying, you make 100 offers a month, you got literally over 12 months worth of inventory before you have to talk to the same homeowner twice. And that's assuming that no new houses are coming on the market in those entire 12 months, which we all know is going to happen. So the fact is if you put the off-market time and effort into on market right now, I really think that's where you're gonna get some good deals. So I'm gonna look at not trying to make a good deal. So what I mean by that is I'm going to use the sales price that they're asking and try to still see what we can kind of come up with and what I would buy right now. As a you watch this, I want you to pay attention to the areas I'm looking in, the bed bath square footage, and the overall price and what I believe it'll rent for. And I think that's what's going to bring you the most amount of knowledge is oddly enough in South Knox it's really popular in some areas, and then other areas it's like bone dry with zero demand for rentals. And so there's areas where you think generically is a good place to invest, then all of a sudden it's like if you've actually been in the trenches in that neighborhood trying to get something rented, you know that it's not just that simple. So if you have questions, I have my YouTube live going above me and I can answer anything you got. So I'm pretty prejudiced towards Powell because I think Powell is like a little bit of an undiscovered West Knoxville without the prices of West Knoxville. I have investors that are buying in West Knox and they are getting good deals. But if someone calls me, I kind of push them to Powell because I've historically gotten this pretty much the same rents as West Knoxville, and I've filled the units just as fast. And there's so much development going on up there because there's so much more flat, large tracts of land. So bigger developers that are putting in like larger parks, actual retail, like strip malls, like a TJ Maxx, Target, that kind of level of commercial properties are getting put up there. And you're still close. You're on by 75, so people can get into the city just as fast. And honestly, like we all know how bad 40 is when you're leaving at 5 o'clock and trying to go up and down West Knoxville, and it is nowhere near as bad on 75. And I now live in Halls and like appreciate living on this side of town compared to I used to live by Cedar Bluff and Oak Ridge and like it's horrendous trying to get up and down this road right here. So if we want to talk on Oak Ridge, I got a lot of people always calling me that are curious on that market. It's a decent market. I get a lot of those duplexes. I manage probably 5 duplexes between North and South Oak Ridge, and so it's like 10 units I have up there, and they rent pretty fast. They rent anywhere, those 2-bedroom 1-baths, for on the low end like $1,200, on the high end $1,400, depending on how well they've been renovated. I own my own duplex up in that area, and mine are kind of subpar quality interior. I didn't really do much on the renovation, so they rent for about $1,100 to $1,200 aside. Luckily I got it for $80,000, but bottom line is Oak Ridge is its own market. So like if you believe in it, go do it. It'll be great. But if you don't believe in Oak Ridge, but you believe in Knoxville, but you're using Oak Ridge as like a satellite city that you think people are going to go work in Knoxville, not saying it's unheard of, but truly the people that are looking and trying to rent there have probably lived there for quite a while, and it's just its own little like neighborhood. And so I don't like long term thinking of building a big portfolio in Oak Ridge, just because I'd rather be in a major city with major demand and not just its own individual city's demand of Oak Ridge. It'd be like, for me, if I was going to go a secondary city, I'd go Maryville, because it's a much bigger city with a big airport, obviously our main airport, and universities, and probably more people living in Maryville. What's that? Ah. Is Zillow my go-to? Probably not. I mean, I believe Crexy. I don't do a lot of. I haven't shopped for real estate very much on multifamily because I'm not quite a buyer yet, and I don't represent buyers. So I think um, for looking at multifamily, to be honest, Zillow is kind of like your mainstream one, and you probably find um, only the most popular ones arriving on Zillow. You'd probably want to look on, I believe, Crexy or LoopNet. I'm sorry, Crexy and LoopNet. I would look on this website for multifamily. If they even, there it is. Yeah, I would use LoopNet and Crexy for that. No worries. But on single family, obviously Zillow is like number one. And oddly enough, like not everything's on Zillow. I'm just using it for this example. So back to like Oak Ridge, Maryville, I really would recommend um, keeping a grain of salt when you invest in Oak Ridge. It is just its own market, and I think that if you can find a deal that cash flows and you have to buy one this month, it's not a bad thing to go buy in Oak Ridge. I'm not saying that. It's just you're not going to convince a large population of West Knoxville to start living in Oak Ridge, and for no reason. It's going to have to be because the rental rate is actually competitive. I myself moved out there for 3 years with my wife because we got basically booted out of West Knoxville as tenants because of how high the prices got on one bedrooms, and we actually moved in to the luxury Main Street lofts at the time, lived there for like 3 years, and of course I'm not gonna be able to find it because it's not for sale, but it's on South Tulane Ave right here. And but we were getting competitive prices, which is obviously not what you want as a landlord, to have to give away competitive rental prices. So the fact that I went out there for that reason as a customer to find competitive rates is not why you would want to invest as a landlord and start your business, quote unquote, there, because every property is straight up a small business and you have to look at it like that. So if you're running a small business and you want to have customers that pay the most, you have to find desirable areas. The ironic part of it all is you have to buy that business first, which is the house. And so if you have business owners that know what they have and know what it's worth, you're probably not going to get a great percentage return on that investment. So we have to go places where, 2 to 5 years into the future, there's added value. And that's where I bring up Powell, because Powell is like, no one that I talk about real estate to are thinking, oh man, everyone's going to put money in Powell. But yet Powell is very close. I think Straw Plains is another one of those where I'm looking for neighborhoods that people have, or people don't think about a lot, but are still under 30 minutes to downtown. And it's like everyone, when I first got here to Knoxville myself, would talk about Fountain City and how popular Fountain City was. And the fact is it was because you could get downtown really fast. But at the end of the day, like, Fountain City ain't that special. I mean, it's not, the houses aren't built better in Fountain City. It's the rent is not even like that great, but it was because sellers were probably undervaluing their property, and it was within 30 minutes of downtown of why all these investors went there, because the numbers made sense, because sellers weren't selling at rates that inhibited cash flow. Where in West Knox, that's all you're going to have is sellers that are able to sell to retail home buyers, people moving in and living there themselves, and ending up with full asking price, and it not cash flowing. So I am now going to zoom into Powell because it's just kind of always where I look. And I'm going to start using my mortgage calculator because I need to start kind of paying attention to how it's going to cash flow. So let's start with a budget of 300,000, because not a lot of things. Let's start at 350. If you're buying a single family over 350 grand and expecting it to cash flow at all, um, it's probably not gonna, to be honest. So a lot of times people, they don't look at the numbers as much as you think they would, and they soon realize that they're in a price point that they like the pictures of the house, but now the numbers are so far off, it's just ridiculous. And so 350, I'm about to do it right here. 350 at 8% interest rate, 30 years, taxes, I'm putting it at like 1.5%. So on a $350,000 house, I'm saying there's going to be $5,250 in taxes a year, which I'm honestly going to just ask ChatGPT this because I just want to be as accurate as possible. So $350,000 house in Knoxville, Tennessee. How much should I expect in taxes as a new home owner in that price range? I don't know if that was the best prompt, but hopefully we can get a number back. So they're saying 1.07, so I'll kind of tailor back I'll go 1.1. So I'm at 3,850, even though it's that, just to know I'm good. And then insurance wise, I'm just gonna say you have a 2,000 annual policy, because you may want to have some add-ons as a landlord, and the landlord insurance is a little higher than just a regular home insurance policy. So without any PMI, right now the mortgage is $3,055, and you can see it right there. I know it's probably blurry, but so for $350,000, if I even want to break even, I have to find something that basically rents for $3,100, which I'm just gonna say it out loud. If I have to get more than $2,500 in rent, I'm not interested in the deal. So this means I either have to drop my price or I put a down payment, because right now this is at zero money into the deal, and I'm probably not going to get a loan with zero down. So there's that, and I'm not going to go into the conversation of what loans to get and such. So let's just bring our standard 20% down. So that's 70,000. So now with $70,000 down on a $350,000 house, we, with taxes and insurance included, we are at $2,542 a month, and that is where I'm still, if I rent this house out even for $2,500, I still am negative in the hole, $42, and I put 70 grand into this deal, let alone closing costs and cleaning the first mortgage that I'll have to pay, because the tenant's probably not going to move into it day one that I close. So there's more than 70 grand in this deal, even though that's the down payment. So let's try and see, but I think we're going to end up right where I'm guessing, where I'm going to have 100 grand into this deal on more than that. Thanks. So you're asking 8% interest rate mortgage would make for a fairly small buffer safety net in terms of risk to your cash flow, unaccepted vacancy, sudden necessary repairs, right? Yeah, that's what I'm trying to figure out right now, is how much money would I need on this? So right now, I mean, after a management fee of like 10%, you still want to be able to have like $200 of cash flow monthly, because if you are only, when everything's operating in peak condition. No repairs that month. Rent was paid on time, and obviously occupied because of that. You're making $200. That means every year you only have the ability to make $2,400, which is like one HVAC. You're cooked for 3 years. So that is where when you get into these deals yourself and you're shopping, do not let a seller take you on a ride. When you buy that house and you close on it, they are gone. They are so gone. You have just entered the cockpit and you now have to fly this thing home. And so make sure you do inspections and you use that inspection for your benefit. Because the one thing that I believe sellers will listen to in this market is honest repairs needed based on that inspection that you do. But I don't want to go down that road quite yet. So let's just keep working on this cash. So on this mortgage calculator, I got 120 grand down on this $350,000 house. And it's just starting to look realistic. So we're talking $350,000 house, $120,000 down at 8% interest, 30 years. Your taxes are at 1.1%, so $3,850 a year, and then a $2,000 insurance policy annually. So the monthly payment $2,182. So now the question is, now that we have looked at what a $350,000 deal looks like, let's go find some, and then let's look at what we believe they'll rent for. And this is probably where you're actually going to want to watch the video and get a lot of value out of it. I just had to go over all this so that way we could kind of start the baseline of expectations and rules and really the standard I'm looking for. So price wise, well, I'll do everything. Let's just look at, so I want as many bedrooms as I possibly can. I want at least two baths. Sorry. If I can get a fourth bedroom, it's more important than having a third bath. 3 bedroom, 3 bath, not as valuable as a 4 bedroom, 2 bath. So right off the bat, I want to keep looking at, and it's crazy. If I can get a 4th bedroom, I know I'm going to be safer on getting more rent. Bedrooms just bring more value. The baths are only important to get to 2. Past that, it's a make or break of whether a tenant will rent yours or somebody else's, but it doesn't necessarily bring a higher rent rate. Square footage is my secondary thing that I would pay attention to before even a 3rd bath. I'd be like, well, if I got another 100, 200 square feet of room, but this other house has a 3rd bath, I'll take the 2 bath with more square footage. Man, let's go up in here. There we go. Dang, I kind of want to just click on this because this seems like a good deal. So 1,292 square foot. So I want to do $1.50 test. So this is the first time I'm using $1.50 to test something. I used to use $1.65, but I think the rental market is just like, kind of, it's softening, but it's not softening in a sense that rents are really dropping. It's just the fact that if you don't have a nice product, people will move on, because I have noticed doing showings myself, people are viewing 3 to 5 rentals and then making a decision, compared to just going and viewing one and being so fearful of losing it that they just apply and take it. So we have shoppers now, which is okay. That is a normal market to have people shop for the product they're looking to buy, and especially the one they want to live in for a year. So I like this because right off the bat, I saw a sub 300, and I also saw that it was over 1,000 square feet. And the 1292 brings immense value for 3 bedroom, 2 baths. That's like a larger home for the rental price that I have in mind. I multiplied it by $1.50, which is like the bare bones of what something should rent for when we're in this square footage size. I believe I have a video on YouTube going over rental comps and how to do that appropriately. And square footage will change the price per square foot, meaning if you have like a 500 square foot unit, it can get way closer to $2 a square foot compared to maybe if you have a 2,500 square foot, you might be closer to literally $1. So I'm doing the $1.50 test, and that tells me that this rental, the floor of like I could give this away and find a tenant, is 1938. And so I'm gonna go back to my mortgage calculator. I know we were at 350 prior to this, but that's like the ceiling of what I would want to pay for something. But I'm gonna go to 280 for this specific house. I'm gonna bring it all the way down to zero down, so no money in the deal. This mortgage is $2,477. And what I will say about this is you gotta have deeper pockets if you want to buy bigger, more expensive real estate, because more expensive real estate, it's not just the down payment that you gotta have more money for, which everyone, completely is aware of, but it's what's the gorilla chasing you when you have a vacancy. And that's some of the best parts about cheaper real estate is if you have a single family home and you don't have a tenant, what's the monthly mortgage that you have to pay out of pocket? The out of pocket actual cash affecting the landlord here with zero down on the deal is $2,477. But let's say like you had found like a 2 bedroom, 1 bath, and the profit margin was the same, or like the return and cash flow was good, and you wanted it. As a beginner investor, I would really actually suggest that, because on average the house is going to be cheaper. And so with that being cheap, even if it cash flows the same, when there is a vacancy, you're only going to get hit with that mortgage, and that actual mortgage could be as low as like $1,500 compared to when we're looking at this deal in front of us. We're talking over close to $2.5 grand. So having nice houses, or having large houses and more expensive houses, can actually hurt and dry you up if you go into them too soon with too little of capital. We'll kind of go on over what I believe I'm going to do with my portfolio to avoid, just running dry on money. But at the same time, you got to be aware of it, because that monthly payment, let's say it was something crazy, like you bought like a mansion and you were okay with it cash flowing $200, but the mortgage was like $4 grand. So you have a higher risk there, because if someone's not in there, then you gotta belly up and bring $4 grand to the bank, or else bad things happen. Where this house that's in front of us is only about 2,500, and if you get a smaller 2 bedroom, less expensive house, maybe like 195. So if we bring it down to like 195 grand, you're talking about $1,800 monthly payment. And so at worst case scenario, you got to think about these things, because like what if your renovation takes a little longer, so you got to 8 weeks longer is 2 mortgage payments. So 1,800 times 2, so you're talking over $3 grand that you got to bring to the table and have it in your back pocket, or else this deal goes south quick before your first tenant moves in. So just starting out small is not it's not something to be ashamed of, or try to avoid. If you don't have the capital, I really suggest doing it at that smaller priced homes to kind of just get used to it and get the feel of like what being a landlord is. But back to this deal: 3 bedroom, 2 bath, 1292 square feet, 280 grand. They just price dropped it 15K. So we both know probably could put in a offer and try to make it work. But if we wanted to just bring some money to the deal, what's 20% down? 20% down, it's 56 grand, and we're just over a $2,000 a month mortgage at that point. So let's just belly up a little bit more. So if we brought $65,000 to this, the monthly payment would be 2 grand. Taxes, insurance, interest rate. So that's probably, I want to get that closer to like 1750, which is, yep, okay. So 100 grand into this deal. So this house right here would not be a safe investment unless you brought 100 grand to this house, which is why not a lot of investors are gonna want to probably make an offer on the deal. But at the same time, if you had 100 grand, the mortgage would be 1,738, and your floor, like, this house will rent at least for the $1.50 test, which is 1938. So the cash flow on that, oh, that's funny, ironically, $200. So just doing, napkin math right in front of us, my guess was right at the beginning of this live. So if you're buying a $280,000 house, assuming your interest rate's at 8%, you're gonna need to bring 100 grand to this to have cash flow of $200, which is brutal right now. But if you want to get the clock going, that's what it's gonna take to have nice assets. Unless you want to go off market, and we can talk about it. If people have questions in the chat for off market, I can go into a high level conversation. I just don't want to veer that direction unless someone has something specific that they're interested in. So 280,000 we're looking at right here. Let's get more competitive with what we're looking at though, because we just started at 350,000 search, and I just found this house. So I haven't even tried to find anything more competitive, and we're only looking in Powell right now as well. So that still gives me hope that we can find a deal where we need less cash to make this thing, purr. So I'm gonna just quickly go 275, and I want 3 bedroom. What are these new homes going for? That's got me curious. Oh, townhouses. Well, we already went over that. I don't like that it's under 1,000 square feet. So boom, Powell's out, unless we wanted to look into basically rentals that we believe that will rent for over 2,000. But I will say right now, I don't want to do that, because I think because the rental market is softening, the DR Hortons, the premier product for rentals that people are wanting to rent, first off, that inventory is always increasing and being built. The house itself is not unique, because that layout is being built all across town, because they have 5 different layouts that they build in these neighborhoods. And so the ability to buy an older house with a unique, trim layout, a little bit of character to it, and a yard at that, because these DR Hortons don't come with much of a yard typically, you're gonna probably be in a better situation where more customers want your product if you have a little bit of an older home with a yard and some character to it, than a DR Horton. But DR Hortons are really good because on the opposite side of the coin, you have a property that's crisp and clean. People typically will rent them for hire. It's just, I think a lot of landlords have been spoiled with like 26, 27, $2,800 a month rent on those houses. And now that the market's softened, the ceiling of the market, I think, has the most risk. Like top tier rent, when you have a budget of $2,800 to pay in rent as a tenant, you have every house in Knoxville that you can choose from. Let that sink in. So if you have $2,800 to pay in rent, you pretty much get anything you want. You want to go downtown? Go downtown. If you want to be out of town, go out of town. You want an apartment? You want a luxury house? You know, these people have every bit of leverage because of their budget to go choose where they want to live. And so when you're competing with that, you have to make sure that you have a unique product that should demand that 2,800. And I just don't find that a lot of places can bring that unless you're like really, really unique, like a downtown loft or like something cool, something bigger, something that has a ton of land, things that can bring that customer, let alone how many people that want to rent and continually pay that price and not have ownership. How many people watching this would want to take 2,800 and throw it into the wind and not have any equity? There's definitely people out there, and it does, you know, come with its value of being able to have freedom and options every year with a lease and be able to kind of pivot and move compared to be locked down for 30 years. But, you know, $2,800 clients don't come by a lot that actually qualify, because if you're talking about someone that makes that pays $2,800 in rent, 3 times income, that's someone that makes $8,400 a month before tax. So a family household income needs to be $100,000 for them to rent that comfortably, and for me to fill that unit with someone that I believe is going to pay rent on time every month. And let's just go and ask ChatGPT, what is the average household income in Knoxville right now? So household income in the city of Knoxville is approximately $50,000. So we're literally, the average household makes half of what we need to see someone qualify to rent the property I'm speaking on at 2,800. And 2,800 is typically going to be 4+ beds, not 3 beds at all, and quite a bit of square footage and value. So all that to say, it's kind of like the ceiling of the market. I want to be as close to $2,000 as I can to make sure I have a ton of demand, fill the unit in under 4 weeks all the time, and not be, you know, biting my teeth together to make sure that this investment makes sense. So I like to float in the $19,000 to $2,000 3-bedroom 2-bath rentals for that reason. I think there's the most amount of value, you know, cash flow, because you can ask for high rent, but then the most amount of demand in people being able to qualify for that, because at 1,900 times 3 times 12, so the household needs to make $68,000 to qualify for a house that rents for $1,900. So you gotta have your customer at the end in mind, or else you quite literally can hurt yourself down the road. If you're willing to bring more cash to the deal, then great. And that brings you into the next conversation. Let's say that we had to buy, trying to get back to that house. Let's say we had to buy this house. Okay. Well, if we could buy it and have the mortgage be, even lower than our neighbors, and our neighbor also has the same house and they are renting it out as well, but we can lease ours for $50 cheaper a month, then who wins? We would win. So the more money that you can put into these deals and the more forgiving you can have rent be, as in lower than market rent, the better off you will sit, because you can pick any tenant you want compared to the neighbor, because you have a smaller mortgage and you can offer deals and you can be more selective on your tenant. If you have the gorilla chasing you every month with that mortgage, and that mortgage is higher than your neighbor's, then you have to ask for more rent to cover that mortgage, in theory, and then you have to bring in higher risk tenants, and then you kick the problem down the road and they end up treating your property poorly, or they skip out and don't pay rent, and you have to go through legal system or cleaning or whatever it is. It hurts the cash flow of the property tremendously, and it truly you do that year after year, and it makes a very negative experience with real estate. And that's where I know that a lot of landlords get exhausted, because they're asking for too much rent and they're bringing in high risk tenants, and they're thinking they're smart by playing the odds, and then it ends up being a louder experience and not passive. And I don't know about you, but for the $200 of cash flow you're trying to generate a month, I hope this thing doesn't produce a lot of noise for me. Otherwise, I can quite literally do anything else in life and make over $200 a month if I want to be stressed. So, back to this deal, 280 grand. How much money do I need down to really bring this to something interesting where it cash flows and it doesn't get so dangerously close to where I don't make any money? You're probably talking 150 grand, which is literally 50% of this house. So we gotta find something cheaper, and that's just because we need to get this mortgage down, but then we still need to find something that rents for closer to that 1900, which is gonna take 3 bedrooms no matter what. And we want this mortgage to be closer to 1700, which quite literally means we have to look at we gotta look at 250 or lower. And I'm gonna zoom out here and stop looking in a specific territory. I want 3 bedrooms if I can get it. And I want the square footage. I want the most square footage I can find. Fun fact, it's not that expensive to put a second bath in a house. And if you have the square footage, you can find a way to do it typically. And I have a lot of investors that do that, and they buy a 3-1 and then upgrade it to a 3-2. It's just very impactful to get that second bathroom. Man, I gotta find something here. I'm even gonna be pickier with the baths. Go 1.5 or more. What the heck is this? Oh, that's discouraging. look at 265 or more. I think that's what we were doing originally anyways. Hey. I just find an absolute rocket of a deal. What? Yeah, this is the deal. I don't even care about this. We paint the dang thing. Paint is easy. So, assuming your HVAC and electrical are somewhere up to date, I'm looking at the square footage. 220 grand? This is a deal. Watch this. So I bet this thing even a $1.50 test. Let's do it. $1.50 times 1280. So 1920. So $1,920 is your floor for what this would rent for. I think you could get $2 grand for it, to be honest. But I'm gonna go into my rentometer, which is honestly gonna shoot me out a number that's like pretty high, I assume. But this is a 3-bed, 2-bath. I'm telling you, this is a good deal. Yeah, see, average $2,000. 75th percentile. So the people that are paying the most in rent in this area are paying $2,300. Again, most people are paying the $19.28. So literally my $1.50 a square foot. Most people in this area are paying the $1.50 a square foot to rent houses. So the median is important because it's the most frequent compared to the average is just taking all numbers and showing you what it combined brings you to. So I try as a property manager to hit above average on rentals, but the median is actually the most likely thing to happen, which is somewhat of the definition, I believe, of median. So if we know this house is gonna, let's just say $2 grand, and it's only 220 grand, guys, this is a deal. 219 at asking. Now it just popped up, so it might be like multiple offer type thing, and they're trying to like see what people will do. But you come in here and offer cash if you got it, and then just refinance later, like literally just pull the debt after you buy it. If you have the cash, that's a strong way to just grab it. But you're talking, this house will rent for $2 grand, and even with 20% down, which is 44 grand, the mortgage is 1,652 approximately. So $2,000 minus the mortgage, which is 1,652. It has $348 of cash flow after your interest of 8%, your insurance, and your taxes and mortgage, of course. And so that, with how nice this asset is, I can just tell that like it's probably rent ready with a cleaning, assuming that electrical and plumbing are anywhere near what I expect them to be. I like the fact that I bet this is like a 1980s house, so that's gonna bring better built stuff, because the stuff in the 40s through 60s are just plumbing and the wiring atrocious, even though the wood was better quality. 1980 exactly. So I like that it's a little newer than most of the houses that are in Knoxville. I like the fact that it's got 1,280 square feet. I like the fact that Rentometer's telling me that the median is quite literally what I thought the floor would be, of what this would rent for. And I think in a good market, what's crazy about this house is I've rented this build, like this house is all around town, and I have rented this out for as high as $2,400. So in a really high demand market, I can get that, which means if I was to market it in the first 4 weeks, I would try the first week at 23, 2200 in the current market just to see if I can grab it. And like, you can get lucky sometimes when you're fishing for a tenant because it's summer, school students are about to move back in August. Like, you're gonna have some people that may pay that. I just don't like penciling deals where I'm guaranteeing that number, but it's certainly possible. The 19 in change is the floor of what I expect this thing to rent. And I like to give people that number before they invest so that way they're not high in emotion and expecting it all to go great and be rich. But I like to outperform those numbers. And 1,280 square feet, I know that like $1.70 wouldn't be like crazy to ask, and that's 2,176. So let's say that's like the ceiling of what we think it could rent for. So at best case scenario, on the mortgage calculator of 1652, you're talking $524 of cash flow, not including management, but it only took you 44 grand to get this deal. Like, that's 20% down. That's what you're gonna have to bring down on a traditional mortgage to buy it in the first place when it's an investment property, maybe even 25%. So this deal works with only 20% down on the deal. And if you're looking at stocks, show me what stock that you can find and you can only put 20% down but get the full stock. You can't. And I think that that's something in real estate where it's like, we forget that you can buy a whole house but only have to bring 20% of the money down. That is powerful. And when they pencil, it's obviously even better, and this one does. And so let's not just trust Rentometer. Let's actually go and see for ourselves what things rent for in the area. So we're gonna go be a customer now, because we definitely want to make sure that when we're looking in the area, we're kind of in this area. So if I wanted 3 beds and 2 baths, I'm gonna go and look at what I gotta pay and see. I'm already looking at, if I want to be an apartment, I can get a deal, but it's only 1,000 square feet. I definitely don't want these. I just want the houses. So, and ours has a garage too. It's nice. The only things that get me concerned with like trying to get the 2,100 and all that is the fact that there's houses out here that have been on the market, but 21 days, 47 contacts, not bad. That's some definitely people calling and being curious. It's just whether or not management companies doing what they need to be doing and trying to convert those leads. I mean, I've been in this scenario. Let's see, a lot of people, when, like I said, the 3.2s, if they're good, they'll get $2 grand. But you gotta have the square footage, number one, and number two, you gotta have things that people want, like updated kitchens and just the trendy stuff that every millennial like myself values. All about the aesthetic. See, this is, oh my gosh, this is just a great example of like $2,500. I wonder how long. 19 days, 1 contact, boom. Like I'm telling you guys, these ceiling prices, they ain't getting jack anymore. You just can't get it. And so when people call me and try to be like, well, I think it rents for 2,500, I'm like, dude, unless you're like ready for it to be closer to the $2 grand, like, welcome to reality. That property management company is not doing anything wrong. They literally just have something up there for way too much money, because no one can that's one person that reached out. That person might not even qualify, probably doesn't. So that's just funny to see, and a lot of people tell me I'm wrong, but I'm just saying, like, the proof is in how many people are contacting. You're on the most famous real estate website in the world, and it's been on live for 19 days and only one person has been interested. If only people understood the funnel between people interested, people actually viewing, people after viewing want to even apply, and then how many of those people that applied are even qualified to rent that place. Like, those are some big barriers to get over. So even if you have a 25% drop off, or let's say 50% of the people continue to the next step. So if you start with 50 people that are interested, then you divide it by 2. Now 25 people viewed. You divide it by 2. 12 and a half people applied, divided by 2. And then that brings you to like 6 and a quarter people that may have been approved. And then how many of those people still want it after applying because they may have applied to multiple places? You have 3 people that are interested in signing a lease. So quite literally, if you have 50 people interested in a property, you might have 3 people raising your hand saying, I'll lease it. And then how many of those people want to lease it this week or next week? These are the things that when you start looking into the sales funnel of the business that you own, which is called the single family you just bought, you have to think about. So we're just going to keep looking in this area, not trying to get off track, but what I'm looking for is people that have nicer houses that are renting them for less than the house at 6524 Red Ash Lane. So I'm going to actually go over here on my other monitor and just make sure I'm looking in the right neighborhood. Okay. So go over here, trying to line this up. Okay, so this is our road. So there is something for rent on our road, which is interesting. So this has been up for 26 days. Looks to be a little older. Does not have a garage, but does have a yard. Yeah, kitchen not bad. They just did a light renovation on it. Nothing too exciting. Clean though, for sure. 1,450 square feet. Ours is 1,280. So they are bigger, and they are asking the peak of what we wish ours could rent for. Trying to figure out how old this house is, but I don't know if it's going to tell me. Right here. And then how many people, I can't find the age offhand, but it's 21 contacts, 26 days. So it's still kind of like 2,100 is still where there's not necessarily crickets, but it is, you know, that's not great. I mean, a year ago, you'd have like 26 days on market, over 100 contacts, freaking like 25 applications, and you'd have it filled within 30 days. And so that's where this property needs to get more love than just being listed on Zillow, and that's where, you know, marketing your properties elsewhere is going to bring a lot of value. Facebook Marketplace is insane. I have a video on that on my YouTube. I have been forced to use Facebook Marketplace for the last month aggressively. I have been working on top of my leasing agent to show properties outside of her schedule, just so that way we can get even more people through these houses, which then inevitably brings you more apps and hopefully brings you qualified tenants. And it's been getting things gone, but it has been brutal for a summertime season. You'd expect to really flow through these leases. We're keeping, you know, 3 or 4 leases being signed a month, and it's getting our inventory lowered. I can show you like what I have right now. We have a lot of like 3-bed, 1.5 baths. Like, I'm trying to keep them to those $1,800 marks, and it has just been like tough. I have showings on this tomorrow. I'm trying to work a deal with somebody on Facebook, but it's a lot of like localized communication where we're not just able to like put it out on a website, have someone fill out their information and schedule on their own. Of course, I have viewings through the next couple days or so, and I can't show you that too long, but bottom line is like it just, you gotta put the time and energy into it, or else you'll see a property sit for months on end. And I really think that no matter what market you're in, and you're wanting to be a landlord, you should be pricing things and attacking things with the expectation that in 4 weeks you have a tenant. If it takes you 6, it takes you 6, but on average your portfolio should be taking no more than a month to be filled at a time. And if it's taking you longer than that, you either have to improve with your sales tactics and marketing, or you have to adjust your price. And there's only so much you can do on both ends. And every time you adjust a price, you need to sit and wait and see if that new bait on the end of the line of your fishing line catches a fish. Because you change the bait and you have to wait for the next wave to see who comes through that door. And so I like to do price changes like weekly, and then I watch it for a week and I look at how many more people funneled through, and I know based on the amount of interest the likelihood of getting it gone. And there are those prices where it's like, for example, 2916 Woodmont Ave at 1825. I really want to get it gone at that price. It's coming up on the 19th day tomorrow. I think I started it in the mid 1900s on day one, and I'm just not willing to go below 1800 for a 3-bedroom 2-bath. We can talk about the asset quality and where it's located, but at the end of the day, like, you should be able to get 1800 out of a 3-bedroom 2-bath, especially one that this is 1100 square feet. So I just got to buckle down and figure it out, and that's just a day in the life of getting properties leased. But I still have properties like this one, 1405 Bonita Drive, Northeast. It's kind of like Fountain City area, 4-bedroom 3-bath, and I'm asking about 2400. And that's where I bring back to, if you want to get to those types of rental rates, you're gonna have to have the 4th bath. If you don't have it, the value just isn't there, no matter the square footage. If you only have 3 beds, that's a very common asset, so you have a lot of competitors. And just because yours is a little bigger doesn't mean that you can ask for hundreds of dollars more. If you want hundreds of dollars more, aka the $2,000 rental to the 24, you got to bring something that not as many people in the market have. And so to demonstrate that, I will go on market on Zillow. I'll zoom back out and I'll say this: I bet you there are fewer 4-bedroom 3-baths than 3-bedroom 2-baths. So we're going to take away, so use exact match. I have 184 rentals. I have 32 rentals. So that shows you in that same span of area that 32 on 184. There's 5.7 times as many 3-bedroom 2-baths as there are 4-bedroom 3-baths. So if you're a family needing a 4-bedroom 3-bath, there are less out there in the market significantly. And if you're trying to squeeze into a large 3-bedroom, you have plenty to choose from. And so the proposition as the business owner, they don't have as much leverage with that 3-bedroom 2-bath, and that's okay. The 2-bedroom 1-bath has less leverage than you. That's why the prices are the prices. And as you go down into like the 1-bedroom 1-baths, there is a whole different conversation with demand and that factor, because there are a lot of single people or young professionals looking to live in them, which is why when you go online and look at like 1-bedroom 1-bath apartments, it's like ridiculous the price, because the business owner has leverage once again. So That's just a great thing to think about when you're looking at this. It's like it gets to a point where don't stretch a 3 bedroom, 2 bath too far with your rental expectation. Just jump up to a 4 bedroom and then you'll get to where you want to be if you're looking for like actual rent rate to be high. And there probably are not that many landlords specifically looking for, well, I want something that rents for the most it can rent for in the market at the that's not even the right statement. It would be the the landlord looking for the most expensive rental at the rental rate. I don't think there's a lot of people that care about that, but there could be if you were, let's say, trying to figure out you had $1 million in cash and you just wanted to create yourself a salary annually, you would want to try to find quite literally the most expensive per unit rental rate. And this person would also probably have to ignore like return on cash return on their million, but we can go into that another time. So I still want to confirm, after showing you 3 bedroom, 2 bath, 4 bedroom, 3 bath scenario, we're going to still go in this neighborhood and just look at 3 bedroom, 2 bath. So there's not a lot of options, which actually is good. Not too much inventory out there. The house that we had was 6524 Red Ash Lane. It's probably gonna rent for $1,900 to $2,100. The mortgage was like $1,650 a month with 45 grand down, which I'd like to think isn't too shabby. And you will, I'm looking. We are just trying to make sure that there's nothing out there that people are just giving away. So this is a 3 bed, 1.5 bath. Photos are low-key atrocious. You gotta take good photos, people. We don't know what the outside of this house looks like yet. We do not have an outside of the house. So this is interesting. Now I want to know how many people, oh, there it is. How many people are interested in this, even though it's been marketed? So, hey, 7 days, 13 contacts, 3 applications at about, $1,750. So we know that's way worse than our house, and not really being marketed properly in the first place, and still getting action. Sounds like a single wide, so it's just different asset. I'm just trying to make sure we don't have anyone giving away their house for like way too low, and then it affects ours. Just like an Airbnb, if your neighbor's just giving it away at $25 a night, you're just never going to be successful. If your asset's similar. So I'm just seeing, oh my gosh. And then this is the opposite thing that can happen, where someone brings you like such a nice property. They're under $1 a square foot, which is ideal. And boom, here we go. 13 days, 43 contacts. This has to go. That's crazy. That is such a cheap rental rate for like, that's your premier product. This is the one that would rent for, literally like a year ago, I would quote somebody like, I want $1.35 a square foot. $1.35 a square foot is $2,835 a month, which is ironically what I was telling you earlier, where it's like not a lot of people in Knoxville can afford that. So I think this is being marketed undervalued significantly, though. I've never seen anything under $1 a square foot, no matter what it is, how big or small or how crappy or nice. So this is a stupid good deal for somebody, and they should sign like a 5-year lease if they can get the landlord to agree to it. That's like crazy. Holy crap. So that's concerning, because someone in the area is giving away their house for probably no reason. They must have bought it cash and don't care. The amount of investors that do that literally don't pay attention to percentages. Not like a crazy amount, but they're certainly out there, and it makes you realize that not every investor is the same, and they don't see real estate the same. So that's near our house. This looks like it could be no, it's a single family. So it's, yeah, like I feel like everyone's realizing these 3.2s were just like overpriced, and now they're getting like competitive with rental rates. Because this is another deal. It's just like under $1 a square foot. I would never. And then this is like more appropriate, you know, $2,400 for a 3-bedroom, 2.5 bath, and it's like a big old house. So, man, people just must be like fearful, and they're just trying to get stuff rented, and you don't know the relationship. Like this one, the owner, Gail Hawkins, MP Development Group LLC. Like that could be. It's either someone so big that don't care, or someone so small that just needs the mortgage covered, or they're moving away and that was their house and they're not willing to sell in this market. So it's crazy how people can give away things. Anyone else have any questions? So far, any questions? This is probably why my freaking Woodmont property at 1825. Would you rather rent this? The photos are good because we have a good photographer, but except for he didn't close the toilet. Or would you rather rent this? 2-car garage, man. I might have to move. Either way, no big deal. I'm still telling you, like, I'm renting things. Now, I know I may have created some fear in some of you guys at thinking maybe our house wouldn't rent for that, because it really is not as nice, and most people would obviously rent these newer homes that are larger with a 2-car garage. But at the end of the day, there's only 2 of them out there in this area, and there's more than 2 people looking for a rental. And so we have to actually ignore that stat and just basically be aware of it, but not be concerned, because unless there was like all across town they're just being given away, there's more than 2 people every month trying to find a house to rent. So I will say that. And here's the opposite version of it. 3-bedroom, 2-bath, obviously a little wonkier of a house, older, nowhere near as nice as this, and they're trying to get $2,500. And I just think that people are all over the place. Emotion is running high, and people are just reacting, and others are unaware, clearly, and just willing to wait. And I'm trying to operate in a period where I can get something rented in 4 weeks. And that's where the numbers I give you, and if you email me or text me for quotes, I'm always going to give you a range of what I think it'll go for in 4 weeks, because no one should be waiting longer than that, because that's already 8% of your year, which is 8% of your revenue gone. So, lo and behold, I didn't look too long, but I'll be honest, guys, like, I don't think there's any excuse for not buying real estate right now, because we spent maybe an hour on this live, and we literally just zoned in to a $220,000 3-bedroom, 2-bath. It's been on 10 hours, 181 saves. I would, if I were you, I'd call up the listing agent and put the offer in, because this thing's gonna go quick, and that's a deal. So officially, I think we're gonna end this live unless anyone has questions, and I can answer by email. So I'll put that in the chat right now. This is my email if you want it, and you can text me as well. And so you can save that in the chat. And if you have any questions about rentals you're looking at, I actually have some landlords that have already emailed me today that I need to get back to and give quotes on what things we'll get in 4 weeks. And the 45 grand, you can get this, and it's a nice house. And assuming, your plumbing, your HVAC, electrical is somewhat operable, somewhat of the age of the house or newer, you're gonna be okay. And it's a great property that'll probably be pretty passive experience and will bring you a quality tenant. And they did a really good job. And I'm probably that price is something where they're looking for people to kind of go at bat. But that's where you got to get with a good realtor or be a good negotiator and come in and really make the offer. So, actually, funny enough, let's just chat GPT it because this is hilarious. So, if a listing of a house is $219,000, this might be a waste of time, but I'm actually curious. And I offer full cash offer, full price. Is it legal for them to deny me, or is this seen as going against fair housing or any other laws? A seller can legally deny your full price. Ah, dang. I really had thought for some reason, legal reasons the seller can reject your offer. They prefer another offer. They're waiting for backup offers. They don't want to sell to an investor or landlord. They change their mind. Okay, so they can basically do whatever the heck they want. But what I would say to get this to work is always have a time constraint on your offer. So always have a finish line of when their response is due. No matter what your offer is, always have that. Always have it contingent on your inspection. And that could just be you literally inspecting a property with your own eyes, and give a deadline for them to do your inspection by, so it increases their belief that you'll close quickly, because most sellers want to close quicker. And so those two things can actually bring you a lot of value, because you can then go put a whole bunch of offers out on houses. So like, this is where maybe there's a little bit more value to be given out on this live. So if a 3-bedroom 2-bath is going to rent for about $1,900 at worst case scenario, in a certain square footage in certain areas, you don't have to get into the weeds as much, and that means you can put an offer in sooner and more frequent on properties. And so the better you get about memorizing square footage, bed bath areas that are higher demand than others, you can quickly have Zillow send you emails on alerting you of new coming to market, blah blah listings, and you can just put in offers that you think are probably going to work out and shotgun those out. And the more offers you make in this market, the more people willing to play ball. I am telling you, like, realtors probably are sitting at their desk hoping someone wants to play a little bit of a negotiation game than to just be waiting for the next person to call, because if they can't be working a deal with somebody, they don't have anything to do. And so I've talked to a lot of realtors with listings, and they're just like, I'm looking for somebody that just wants to get in the ring and box a little bit and get this deal done, because they know their seller probably listed it a little high and they can work a deal, but they can't find anyone that wants to play ball or get in the ring. And so if you get in the ring and you start playing the game, it's only a matter of time before you actually land a deal. And then once you land a deal, you're probably going to want a contingency on it, which is why I'm suggesting to put a contingency on at least a walkthrough of buyer's approval. Make sure your verbiage is correctly, check with your agent for that. But that just allows it so that way, just in case you don't want it, you can cancel the agreement, and you can just guarantee you'll do it within 24 hours or 48 hours of offer accepted. So you just get out to the property, look at it, make sure it's what you thought and the numbers did make sense, and double check your work, and then boom, you're good. Where you probably are not going to feel comfortable shotgunning offers 5 a night after you get off your work if you have to do all your due diligence up front. So the due diligence is what's hurting a lot of buyers. Do it afterwards, put in offers, change the offer after you go view it if you need to make the deal work. But getting a seller on the line playing the game is easier than ever because there's less people that are serious buyers out there in the market, which is why we're dealing with what we're dealing with. So I'm going to end it. I appreciate it. If you have any questions on how I view real estate or my game plan or my experience, just reach out. I gave you my email and my phone number in the live. We successfully went on to Zillow. We found a deal on market. It's only going to take 45 grand down to make it cash flow, and it has a lot of upside on what it could cash flow, and it will safely cash flow $200 to $300 with that 45,000 down, and you will have yourself a nice single family home. I believe that 3-bedroom 2 baths appreciate better if there's more people in the market for that size and amount of bedrooms than any other property when it goes to selling it, if you do plan to sell in the future. So it's more liquid than a 2-bedroom 1 bath starter home. It also puts you in a situation where I just think appreciation wise is better. There's only so much you can do with a little 700-800 square foot house, but once you get over 1,000 square foot, I think that the actual investment will pay off in the 30 years and truly be worth quite a bit more. And if you think about, if every piece of real estate doubles every 20 to 25 years, you want to kind of buy the most expensive real estate you can cash flow and afford, because it's going to impact your net worth more. I mean, if you only got $1 and it doubled and it turned into 2, no one's that excited. It's only exciting when you can get things that are, 400 grand, then all of a sudden double into 800 grand, and now you're $400,000 in the positive net worth direction. That's truly impacting your life. So houses like this, you're under the national average of a sale price already, and I don't think houses are going to be getting any cheaper than this anytime soon, personally. And so if you can just get going and get the clock started, especially the young investors in the room like myself under the age of 35, like, you're going to thank yourself later. Even if you do go through a little bit of a dip, you buy this one, then the market shifts even more negative in the next 6 months, let's say. You buy another one. The worst case scenario, you're getting a better deal as you go, because I think the rental market is like way more stable than the sale market and the retail market, I should say, of Knoxville. And so as realtors are feeling this like lull and like this lowering of the market, like in the rental market, it's just simply like back to normal. Things still actually rent for above what I perceive them worth, but they just have to be like super nice. And we are still on average getting things rented in at 18 days on market. And that's the last 44 leases that I've signed. So on average, the last 44 properties I've marketed, I've signed leases in 18 days. And I've stayed in my, obviously it's my opinion, but my belief of what it's worth. And those numbers are in line with what I went over this property, and the rationale is the same. So I think that the rental market's solid. Everyone's freaking out in the buy and sale market. Go get your deals. If they get better, great. If they get worse, well, then you got a really good deal in that situation. You got it while we were at the absolute lowest, and it's gone up. It's a win-win either way. It's just like the stock market, where you just buy a little bit at a time and you let everyone run around in circles and the building's on fire, and you're like, well, I don't care. I'm buying another one. And then eventually you're freaking 80 years old and everyone's asking you how you did it, and you're like, I just ignored all the people burning around me and I just bought a house. It's not that complicated, and I was willing to put money into it. And to end the live, anyone can put 20% down and get a piece of real estate, but no one can put 20% down on stock and get the full stock. And that's just like you got to reframe yourself, and this might be a therapy session for you, but you got to see the value in real estate on so many levels. But the main one is you can have a whole house today for only 20% down, 25% down, and that's, to me, so incredible. And we've all been so, babied because we could burr out of houses, get positive equity out of it like no other, and spoiled, to say the least. And if it only took 45 grand to get a deal, I would do that deal, especially with the ability to buy it in higher appreciating neighborhoods in the future and better quality assets. So, all right, peace out. Love me, hate me. You watched it. See ya.